Hello Chartered. Now today we'll start with inventory valuation. Now inventory valuation में the first thing that strikes us is what is inventory? Why inventory valuation? How to value inventory? Correct. Now what is inventory? Inventory means nothing but unsold or unused goods. Unsold or unused goods. Goods means those items which we are using in the process of production or in the process of selling. So there is three types of inventory. Inventory is nothing but unused or unsold goods. Goods means those items which are used in the production process or those items which are used for selling. We are dealers of. Correct? So how many types of inventory are there? Three. Three powerful types of inventory are there. Number one, raw material. Number two, work in progress. Number three, finished goods. Am I clear? So what is inventory? If anybody asks you, then inventory is of three varieties. That is raw material, work in progress, raw material, work in progress, finished goods. Correct? What is raw material? Shirt. Suppose we take example of shirt. Then the cloth which we require for shirt is raw material. Correct? Cloth which we require for shirt is raw material. Second question, if I ask you, Chartered, suppose I have purchased 1000 meters of cloth to produce shirts. I have purchased 1000 meters of cloth to produce shirt. Now, Chartered, out of that 1000 meters, I have used 800 meters in producing shirts. So how many meters I had purchased? 1000 meters I had purchased to produce shirts. Out of this 1000 meters, 800 meters I have used to produce shirts and 200 meters I have not used in the current year. Out of this 800 meters, I could produce 700 shirts which are complete, ready for sale, ready to sell. 700 shirts are complete which are ready to sell, and 100 shirts are incomplete till the year end. That means certain shirts ka collar is not there, button is not there, incomplete shirts. These incomplete shirts, Chartered, will get completed, will never get completed. Ayyo sir, aisa thodi, it will get completed. Correct. So these are ready to sell. Out of these 700 shirts, 550 shirts are sold. 550 shirts are sold. Correct? And 150 shirts are unsold. 100 shirts are in process. That means they are not complete. Now, Chartered, tell me, this 200 meters I have not used only in the current year. This 150 shirts are ready to sell but not sold. And this 100 shirts are in process which are not completely produced. So I purchased 1000 meters, 800 meters used for creating or making shirts, 700 shirts I made also. Out of that 700 shirts, 550 shirts I sold. Now, Chartered, can you see these three yellow parts? Yes, sir. These three yellow parts, we call it raw material. इसको हम लोग क्या बोलते हैं? व्हाट डू वी कॉल दिस? वर्क इन प्रोग्रेस और सेमी फिनिश्ड गुड्स, और इसको हम लोग बोलते हैं फिनिश्ड गुड्स। करेक्ट? So you understood what is inventory. Inventory is 200 meters of raw material, 100 shirts in process which will get completed, that is work in progress, and 150 shirts are unsold. Am I clear? Which is lying in my godown. We are supposed to learn valuation of these three things, which is our inventory valuation. Am I clear? Yes. So chartered, if anybody tells you what is inventory, so you understood what is inventory. Correct? Shall I move ahead? Yes, sir. Now chartered, why to value inventory? Now you must have seen inventory or stock as we call it. Inventory comes in trading account, debit side as opening stock, closing stock. Correct? Inventory comes in trading account, opening stock, closing stock. If there is incorrect valuation of inventory, that means our profit will be incorrect. If I by mistake value inventory wrongly, then my chartered profit will be wrong. Yes. So inventory valuation helps us to find out correct profit. Second thing, inventory appears in balance sheet also. Yes. Under that current assets, we write inventory. No, yes. So if inventory valuation is incorrect, don't you think my financial position is incorrect? So inventory valuation helps me to find out correct profit. Correct, sir. Inventory valuation helps me to find out correct financial position. Yes, sir. Now chartered, to find out liquidity position of any organization. Liquidity means how much liquid the organization can generate instantly. We compare current assets and current liability to find out the liquidity position. If this I can convert into cash fast. Out of that cash, this is the amount which I have to pay soon. Correct? This is the assets which which can get converted into cash fast. But out of this cash, this is the amount which I am supposed to pay soon. So comparing current assets and current liability, I can find out the liquidity position of the organization. To find out liquidity position, I require what? Current assets. And current assets include what? Right? Current assets में क्या होता है? It includes inventory. It helps me to find out liquidity position of the organization. Yes or no? So why do we do inventory valuation? We do inventory valuation for three reasons. Reason number one, correct profit. Reason number two, correct financial position. Reason number three, find out liquidity position. ठीक है सर, ये भी समझ में आ गया. Now inventory is divided between two organizations, rather three. There are two types of organization. One is goods sector, the other is service sector. With goods sector, the other is service sector. Now chartered, goods sector is also divided into two categories. Goods sector is also divided into two categories. One is manufacturer, one is trader. Correct? Manufacturer will have three types of inventory: raw material, work in progress, finished goods. Correct? Trader will have only one type, that is finished goods, and that finished goods is popularly known as stock in trade. Am I clear? Yes. Now charted service sector के लिए, for example, we are in service sector, or any education industry is into service sector. So goods which are used in producing services is inventory. For example, classroom में a teacher is writing with the marker. Unsold marker, unused marker is inventory. A teacher is using mic. Mic में there is a battery inside. That battery is an inventory for us. Then marker may we put ink, that ink is inventory for us. Am I clear? Duster is inventory for us. For hospital, syringe is inventory. Am I clear? So for service sector, goods used in production of services. Correct? Third major point. Inventory should be valued at cost price or market price, whichever is lower. Inventory should be valued at cost or market price, whichever is lower. Inventory should be valued at cost or market price, whichever is lower. Now, my wonderful chartered accountant. Inventory should be valued at cost or market price, whichever is lower. Now, this we will divide into two parts. First of all, this market price ko, what do you mean by the term market price? Now chartered, market price means two things. Purchase wala market price or selling wala market price. When you purchase goods from the market, that is also market price. When you go and sell the goods in the market, that is also market price. Correct? No? So which wala market price? So market price can be of two types. One is purchasing wala market price. One is selling wala market price. Purchasing wala market price is known as replacement cost. Purchasing wala market price is known as replacement cost. And selling wala market price is known as net realizable value. Net Now again I tell you, how many types of market price are there? Two types of market price. One market price is purchase wala market price. The another is selling wala market price. Purchasing wala market price is known as replacement cost. Sir, why purchasing wala market price is known as replacement cost? Suppose I am purchasing a pen. Why will I purchase a pen? Because my old pen is over. The life of old pen is over, or it is broken, or it is in unusable condition. Therefore, I will purchase a new pen. That means whenever I am purchasing something, I am replacing my old thing. Are you understanding? Whenever I am purchasing the pen, I am replacing the old thing. Yes or no? Yes, sir. Now chartered, so replacement cost, when I say, when I purchase something, I am replacing that old item. That is why it is known as replacement cost. So students generally ask me, sir, you had a pen that got lost, or that got broken, or that got worn and torn out. So you purchased a new pen. That means new pen has replaced your old pen. That is why cost of purchasing the new pen is known as replacement cost. Wonderful. Cost of purchasing a new pen today is known as replacement cost. Wonderful. But sir, you would have purchased the pen first time also, no? That time what cost it is called? That time it is not replacing any old thing. That time, beta, it is replacing your needs. That is why it is known as replacement cost. First time it is replacing your needs. That's why it is known as replacement cost. Acha. So replacement cost, either it replaces your old product or your needs. Correct. So replacement cost is cost of purchasing goods today. It is also known as current cost. It is also known as current cost. Correct. And when I say realize this, it should be valued at cost of market price, whichever is lower. Cost of market price, whichever is lower. When I am talking about this cost charted, this cost is historical cost. The cost at it was purchased. That is cost at which it was purchased. Now, if you listen to these two sentences now, you will understand. I purchased it for 100 rupees, but today if I go and purchase, it will cost me 80 rupees. I had purchased it for 100 rupees. I had purchased it for 100 rupees, but today if I go and purchase, it will cost me 80 rupees. That means this is your historical cost. And this 80 rupees is your replacement cost. Am I clear? Yes, no? Yours. Now chartered. Understood? Yes, sir. Now, I told you there are three types of goods: raw material, work in progress, finished goods. Fatafat, chartered accountant, tell me which out of the three, raw material, work in progress and finished goods, which we purchase and which we purchase. We purchase raw material or finished goods. As a manufacturer, you purchase raw material or finished goods. Correct? Now people reply, okay. If you purchase raw materials, that means for replacement cost is used for raw material, and finished goods you sell, therefore NRV is used for finished goods, or NRV is used for finished goods or WIP. So WIP we don't sell, but obviously WIP is in the process of selling. No? Ultimately you will sell WIP. You will purchase or sell? Sell. Correct. Now, therefore chartered, raw material valuation. Raw material. If market price of finished goods is greater than cost of finished goods, then the raw material should be valued at cost. If market price, that means, अब ध्यान से देखो, this is my raw material, I want to value this 200 meters. For valuing this 200 meters, I will check the cost and market price of this finished goods. If market price of finished goods is more than cost of finished goods, then this raw material will be valued at cost. But if chartered, market price of finished goods is less than cost of finished goods. If market price of finished goods is less than cost of finished goods, then raw material should be valued at cost or replacement cost, whichever is lower. Now charted. So you understood raw material ka valuation. Again I repeat, if market price of finished goods is greater than cost of finished goods, then unused raw material will be valued at cost. But if market value of finished goods is less than cost of finished goods, then unused raw material should be valued at cost or replacement cost, whichever is lower. Understood, Aditya? Now charted. Now charted for cost. How to find out the cost? Cost is basically purchase price minus trade discount plus purchase price minus trade discount plus taxes plus freight inward, that will give you cost of purchases. Add conversion cost, that will give you cost of finished goods. Cost. Now chartered, understand this thing very carefully. Purchase price minus trade discount plus taxes plus freight inward will give you cost of purchases. If I am a manufacturer, then I will write cost of purchase of raw material, add cost of conversion. Listen to me. If I am a manufacturer, then this cost of purchase is cost of raw materials for me. Add cost of conversion, this will give me cost of finished goods. But if I am a trader, then this purchase price minus trade discount plus taxes minus, this is nothing but, if I am a trader, then this is only cost of finished goods, because I don't incur conversion cost. If I am a manufacturer, I will purchase raw material, convert, get finished goods. But if I am a trader, I will purchase goods. How to calculate purchase of goods? Like this only. Am I clear? Yes, no? People, if you have understood, thumbs up. Samjha? Thank you. This is 2 nahi. This is trade discount. Now chartered. This is basically fourth. Number 3, 4, 5. Correct? Now, 6 chartered. 6. Six is inventory valuation can be done. Questions. Questions on inventory valuation is basically on 4 areas. Area number 1 is the stores ledger, that is LIFO FIFO. Area number 2 is trading account. Area number 3 is adjusted selling price. Area number 4 is stock reconciliation. Stores ledger, that is LIFO, FIFO, trading account, adjusted selling price, and stock reconciliation. Am I clear? Yes. So this was the basic briefing of inventory which I wanted to give you all. Got it? Correct. Now we'll start with trading account a question. And we'll start with that question which had come this time. Now, chale? Yes, sir. Now, trading account. Trading account. Opening stock, purchases, direct expense, gross profit, sales, abnormal loss, missing inventory. So on debit side, you will have inflow of goods and direct expenses. And on credit side, you will have got outflow of goods. On debit side, inflow of goods and direct expenses, and credit side, outflow of goods. Direct expenses charted is also known as expenses for gross profit. That means these expenses are incurred to earn gross profit. Am I clear? What is invoice price of raw material? Purchase price minus trade discount plus taxes. Invoice price means the price which is written in the bill. Bill comes after trade discount and adding taxes. Now, trading account, opening stock, purchases, direct expenses. Opening stock, purchases, direct expenses. This is on debit side, you have two things: inflow of goods and direct expenses. On the credit side, you will have outflow of goods. One, sales, abnormal loss, missing inventory. Missing inventory matlab, your books is showing 500 units. You run to the godown and check in the godown. Ayyo Rama, godown mein there is only 450 units. So 50 units kahan gaya? Chuha kha gaya. Rat ate it off. It is missing inventory. Am I clear? Yes, sir. Direct expenses are also known as expenses for gross profit. Expenses for gross profit matlab expenses incurred to earn gross profit. Correct? Then gross profit is transferred here. Indirect income. Indirect income means any income other than sales is in indirect income. Indirect expenses. Indirect expenses, you spend money from gross profit. After you earn gross profit, the money which you spend from gross profit is known as indirect expense. Therefore, indirect expense is also known as expenses against gross profit. Am I clear? Yes, net profit. Now charted GP is 25, sales is 6 lakhs, GP is 25% on sales. Therefore, we can say GP is 25 by 100 into sales is equal to 25 by 100 into 6 lakhs is equal to 1,50,000. Sales is 6 lakhs, GP is 25% on cost. GP is 25% on cost means GP is equal to 25 by 100 on cost. GP is 25 by 100 on cost. That means if cost is 100, what is 25% on cost means? 25% on cost means if cost is 100, profit is 25. If cost is 100 chartered, profit is 25. Then sales is how much? 125. So cost 100, profit 25, sales 125. Yes or no? When I say 25% on cost, that means if cost is 100, profit is 25, sales is 125. Therefore, profit on cost is how much? 25 by 100. Profit on sales is how much? 25 by 125. This will become 25 by 125 on sales is equal to 25 by 125 on 6 lakhs is equal to 1,20,000. Now, everybody would have learned this in foundation. There is no rocket science in this. But some people say learn like this: 25% on cost is 20% on sales, 50% on cost is 1/3 on sales, 1/3 on cost is 1/4 on sales. Kya 1/3, 1/4? Some remember 33 1/3% on cost is uh, uh, 33 1/3% on cost means 25% on sales. Something that way they learn. Or somebody learn by 1/3, half on cost, 1/3 on sales, 1/3 on cost, 1/4 on sales, 1/4 on cost, 1/5 on sales. Correct? I'll tell you. In all this method, no, if you get 30%, if you get 35%, your entire logic will fail. So it's better if GP is equal to X% on sales. It is X by 100 plus X by 100 into sales. If GP is X% on cost, it is equal to X by 100 plus X into sales. If it is on cost, eyes on the board. If it is on cost, add 25 to base. Am I clear? Yes, sir. Now, now chatted. Let's do a question. From the following information, ascertain the value of stock as on 31st of March 2019. Value of stock on 1/4/18 is 70,000. That means this is opening stock, this is trading account. What can I repeat? This one. If it is 10% on sales, then 10 by 100. If it is 10% on cost, then 10 by 110. If it is 20% on sales, then 20 by 100. But if it is 20% on cost, it will become 20 by 120. Samiksha, this only, no? GP 25% on cost, that means 25 by 100 on cost. 25 by 100 on cost means if cost is 100, profit is 25, selling price is 125. If cost is 100, profit is 25, selling price is 125. That means profit is 25 by 100 on cost and profit is 25 by 125 on sales. Correct? Say yes or no, please. Bolo, bolo. So, if it was 25% on cost, denominator mein you added 25, no? If it is X% on cost, denominator mein I added 20, X. Sure, shall I move ahead? Now, from the following informations, ascertain the value of stock on 31st of March 2019. That means this trading account is from 1/4/18, 31st March 19. Now, value of stock on 1/4/18, that is opening stock. Correcta, incorrecta? Correcta. How much? 70,000. Purchases during the period. Purchases during the period from 1/4/18 to 31st March 19 is 346. So purchases $346. Manufacturing expenses. How much? 70,000. Very good. Sales is how much? Sales is equal to 5,22,000. At the time of valuing stock on 31st of March 2019. 18 मतलब opening stock I am talking about. 31st of March 18 मतलब opening stock. At the time of valuing opening stock, a sum of rupees 6,000 was written off. Written off matlab subtracted. While I was valuing my opening stock, rupees 6,000 was subtracted, which was originally purchased for 20,000. So this is becoming slow moving item. What is slow moving item? That item which is not getting sold easily. That is why I am trying to value that item at below cost. Correct? No? Are you understanding? Now narrow fit jeans are not in trend. Straight fit jeans are in trend. So narrow fit क्या हो गया? Slow moving item. Correct? Incorrect? हाँ. Whose cost is how much? 20,000. But written off how much? 6,000. You are valuing it at how much? 14,000. ए समझा के नहीं समझा. Number 2, calculation of GP. Total sales is how much? 522. Let's divide it into two parts. Slow moving item, normal item. Slow moving item, normal item. It is given at the time of valuing stock 31st of March, rupees 6,000 was written off. Written off matlab subtracted of a particular item which originally purchased for how much? 20,000. Which originally purchased for how much? 20,000. And was sold for 16,000. And was sold for 16,000. But the above transaction, for above transaction, the gross profit was 25% one sale. But for above transaction means, but for means except. But for means except above, except the above transaction, the gross profit was same everywhere. इसका मतलब slow moving item was sold for how much chartered? The slow moving item was sold for 16,000. Very good. Out of 5,22,000, if slow moving item is sold for 16,000 chartered, can you tell me at what value? Can you tell me at what value normal items are sold? Tell first. If slow moving items are sold for 16,000, then can you tell me how normal items are sold? At what value normal items are sold? Ding, 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 ding. Now I want normal item ka sale. Correct. JKSC 221142. 221142. Correct, Sridhar. Devedita, correct. Now charted. If total sales is 522, out of that slow moving item ka sale is 5,16,000. Therefore, normal item ka sale will become how much? Normal item ka sale will become chartered 5,22,000 minus 16,000. Yes or no? That is 5,06,000. Understood. So slow moving item ka selling price is 5,06,000. Slow moving item ka selling price is 5,06,000. Slow moving item is valued at which price? 14,000. Slow moving item is valued at how much? 14,000. Correct, incorrect? Yes. If slow moving item is valued at 14,000 and it is sold for 16,000, That means 14,000 ka item is sold for 16,000. Tell me. Yes, sir. How much did you earn gross profit on slow moving items? Sir, 22,000. Slow moving item per you earned a gross profit of? Slow moving item per you earned a gross profit of how much? Correct, Akash. Slow moving item per you earned a gross profit of 2,000. Yes, sir, no, sir. Yes, sir. Now charted, again I tell you, selling price is how much? 16. It was valued at how much? 14. So 14,000 ka goods you sold it for how much? 16,000. If 14,000 ka goods started, you sold it for 16,000. How much is the gross profit? 2,000. Correct. And this, on this there is a gross profit of how much? 25% on cost. That means, can I say gross profit on this is 25 by 125? Yes, yes. 25 by 125 on 5,06,000. Tell me. No, no, no. No, 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 no. Jaldi, jaldi. Sir, 5,06,000 into 25 by 125. The answer is 1,01,200. So on normal items, you earned a gross profit of 1,01,200. On slow moving items, you earned a gross profit of? On slow moving items, you earned a gross profit of 101. स्लो मूविंग आइटम्स में ग्रॉस प्रॉफिट 2000, नॉर्मल आइटम्स में ग्रॉस प्रॉफिट 101 200. therefore total gross profit is equal to how much? The total gross profit is equal to 1,03,200. correct. total gross profit correct. तो जीपी आ गया 1,03,200. Now tell me, closing stock, balancing figure, closing stock, balancing figure. Everybody understood? Thumbs up, understood? Great. Yes. 67,200 is the balancing figure. Hey, how you got 67,200, sir? Debit minus credit. If you do, you will get balancing figure 67,200. Correct. चले ए सुनो ना चलो. Now charted, this is same sum. This is this attempt exam paper. From the following particulars, ascertain the value of inventories as on 31st of March 2025. Now, ascertain the value of inventory. Opening stock. So this trading account is from /31st. Correct. 1/4/24 to 31st of March 25. Why are you all doing all that, Aditya? Why this is not good? This method, Aditya? Reply. Inventory is how much? 1,76,900. So to opening stock, 1,76,900. So this question, if this such adjustment comes in final account, no, so this method will be used in both. Oh, aisa kya? Yes. So 1,76,900. Purchase is how much? 9,64,000. Then manufacturing expenses 1,90,000. 1,90,000. Then selling expense will not come, admin will not come, financial will not come. All this will come in PL. Sales is how much? 15,37,000. Now chartered, at the time of valuing inventory, a sum of rupees 7,500 was written off a particular item in the balance sheet which was originally purchased for how much? 70,000. So a sum of rupees 7,500 was written off which was originally purchased for 70,000. ठीक है. So point number 1. Slow moving item. Cost is how much? 70,000. Written off how much? Written off is 7,500. So slow moving item ka cost will become how much? 62,500. The question what they are asking, asset and the value of inventory, even in the first line. Asset and the value of inventory. Asset and matlab calculate. Calculate the value of inventory. Number 2, 62,500. Now, barring the transaction relating to this item, the gross profit earned during the year was 20%. ठीक है. So what was the sales? Sales I will divide into 2 parts. Slow moving item, normal item. Slow moving item का selling price is how much? Was sold for 65,000. ठीक है. Sales is how much? 15,37,500. Sales is how much? 57 lakh. 15,37,500 is my sales. Correct? First adjustment done. On 15th of March, goods of the sale value 20,000 included in the above were sent on sale or return basis. Acha, the period of approval is 4 weeks. That means 15th of April tak they can reply. He returned 40% of the goods on 10th April, that is next year. Right? Till current year, are these goods sold or not sold? We sent them on 15th of March, but till 31st of March, are these goods sold or not sold? Or till 31st of March, Aditya, is this good sold or not sold? Just reply this much. 20,000 ka goods I have sent. 40% of the goods is on 10th of April, approving the rest. He returned 40% of the goods on 10th of April and approving the rest. So 60% he approved, 40% he returned, but all he did was on 10th of April. My question is, till 31st of March, how much goods out of this is sold? No, you are not answering my question. My question is, out of this 20,000, how much goods are sold? You know the solution. I am asking you the logic, Aditya. नो सर, मतलब JKSC sales is 15,37,000. Acha, please, it's a request to all of you. Listen to the question and answer that question first. The question is that goods of the sale value 20,000 is included in the above sale. My question is this 20,000 sold till 31st of March? Yes, no. Ashte. Rather, I would put it this way. Out of this 20,000, how much is sold before 31st of March? Out of this 20,000, how much is sold before 31st of March? Correct. Now you gave me the last line where you gave me the answer. Now, again I will tell you. Read this entire question. He returned 40% of goods on 10th of April, approving the rest. So sold 60%, returned 40%. All this happened on 10th of April. My question you all did not hear. My question is, out of this 20,000, how much is sold till 31st of March? Again, it is very clear. I have got 5 fingers. 2 fingers are not cut. How many fingers I have? 5. There is no assumption. I want a basic answer. No JKSC. The sales amount in the working note and the trading account are different. I have changed it. Correct or no? Dikshit, correct. Harshit, wrong. आप लोग को एक चीज समझ में नहीं आ रही है. See, listen, now when you hear this now you will understand what mistake you all are making. 15th of March को I sent 20,000 का goods. 31st March nothing happened. 10th April को 60% is sold and 40% is returned. You listen to my question. My question is, till 31st of March, how much goods are sold? Everybody is giving me 12,000, but 12,000 ka sales took place on 10th of April. I want you send goods on 20,000 on 15th of March. 31st of March ko how much goods are sold? Sridhar. Now correct. Correct, Aditya, that I told you earlier only. Samiksha, 20,000 ka goods I have sent. 31st March tak nothing is sold. 10th of April ko 6 is sold. If I tell you 15th March, I have sent, S-E-N-T. Sent does not mean sale. I sent 20,000. But sold on 15th of April. Why I am stressing so much? I could have easily explained and moved that. I just wanted to tell you how you read the question. Reading is so very important. If you don't read it correctly, you will never solve it correctly. If you have sent on 15th March and the goods are sold on 15th of April, my question was, on 31st of March, how much is sold? The answer is, sir, till 31st of March, nothing is sold. You have sent 20. Till 31st of March, nothing is sold. Whatever is sold is after 31st of March. My question was very specific. Till 31st of March, how much is sold? See, again, Aditya, I don't want so much of explanation. I wanted one answer which you have given long back. Correct. No, it cannot mean that. See, it is given. He returned 40% of the goods on 10th April 2025, approving the rest. That means approving the rest means rest 60% he approved. On which date? 10th of April. Everything is written very clearly. One line may answer. Nothing is sold. Again, see, Sumukh, there is no question of sale on approval. There is that. It's a keep it simple English. The simple English is by 15th March ko I have sent. There is 31st of March. 15th of April ko sold. 31st of March ko sold or unsold. Simple question. The answer is it, if I ask you, answer me in yes or no. Is it sold? Give me answer in one word. Yes or no. What answer you would give? If it is, bas, game over. It's a one word answer. Full 20,000 sold. No. Imagine if we just read it wrong. Forget about solving. If we have read this only wrong, how we will solve it? Then whatever we do know, if you look at the solution and understand the solution, again you are making a mistake, beta. Hamara kaam, our job is not to understand the solution. Our job is to make a solution. Examination, we will not get a solution which you are supposed to check. Our job is not to understand the solution, but to create a solution. But most of us do what? When we see a tough question which we cannot solve, we don't try to read the question 10 times and understand. Now, what happened in so much of discussion, no, the entire question ka crux went away. Now, again, so on 15th of March, we have sent how much? 20,000. Entire 20,000 is included in the sales? Yes. Entire 20,000 is included in the sales. But did we sell? No. So should it be included in sale? Yes or no? Did we sell? No. Should it be included in the sale? Did we sell? No. Should it be included in the sales? Yes or no? No. No. Wonderful. No. 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 It should not be included. Wonderful. Na 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 na. So less sale on approval. 20,000. You are left with 15 lakh 17,000. Correct. Now charted 15 lakh 75 में 15 lakh 17 में how much is slow moving item? बोलो बोलो. 15 lakh 17 में 65 is slow moving item. Therefore non slow moving item is how much? Now it is 15 lakh 17,000 minus 65,000. is equal to 14,52,000. Its valued price is how much? Now, इसका valued price is how much? You have valued at 62,500. 62,500 is its valued price. So gross profit will be how much? 2,500. इसमें GP is how much? GP is 20% on sales. Wow. So 20 by 100. Last sum it was 25% on cost. Last sum it was 25% on cost. So I did 25 by 125. It was 25% on cost. But over here it is 20% on sales. So I did 20 by 100. So in 2,90,400. And chartered total GP is equal to plus 2,292,900. Correct? Now, put in 50. So gross profit is how much? 292,500. So closing stock is a balancing figure. Tell me. Closing stock is a balancing figure. Tell me. Two 92,900. Huh? Closing stock यहाँ का balancing figure. No sir, gross profit है. 15 minus sale on approval, 20,000. So 15, 17. Total sales will become 15, 17. Now tell me. Correct JKSC. No Bibhuti. Check once again. I will only do calculation. $15,17,000 minus 176,900 minus 964 minus 1,90,000 minus 292,500 is equal to 106,400. बोला बोला 86,800 is not the correct answer. Are credit side you have decreased, so your closing stock. Again, I'll write all the figures so it will become easier for you. You can do all these answers, but I think addition subtraction so you should do, no beta. Opening stock is 1,76,900. Purchases is 9,64,000. Then manufacturing expense 1,90,000. Correct? Sales 15 lakh 37,000. Less sale on approval is 20,000. So outer column it is 15 lakh 17,000. Gross profit is 2,92,900. Now tell me what is the closing stock answer. Correct, Vibhuti. Sorry. Correct. Yeah, earlier I had written gross profit, a wrong figure. So you get closing stock as 1,06,800. Correct. Yes, sir. No, sir. Yes, sir. Now chartered. So you have done with trading account. Now chartered. Take 5 minutes ka break and then we start. After this, we start with stock reconciliation. 5 minutes. Now charted. Stock reconciliation. Now I don't know how many of you like this. Stock reconciliation. Shall we start? Now, stock reconciliation can be done in varied ways. Like it, Aditya? Stock reconciliation can be done in varied ways. Way 1, a format is there. Some things you add, something you subtract, and you get the answer. Like add purchase, less sales, add stock line with branch unsold, something. Correct? But how many of you don't like stock reconciliation, or you feel that some sums I get it correct, some sums I don't get it correct? Then do thumbs up. You feel that some sums I get it correct, some sums I don't get it correct. So I don't know where I am going wrong. How many are of that variety? Then charted, listen to me carefully. It is a very different method, those who have not studied foundation from you. Initially it will look little off, but with a passage you will feel that you don't have to remember anything apart from sheer common sense. You have to be a good listener and a good reader. Stock reconciliation में first point. Let's understand sale on approval. Sale on approval means we have sent the goods to a party and told him that within the specified period, if the goods are sold, very good. If the goods are not sold, then you can return it to me. Correct? Suppose I send the goods on 1st of November, told him that you have got 3 months. That means 1st of November ko I send. 3 months means 31st of January. I tell him that between these 3 months, you keep the goods. If the goods are sold, very good. If the goods are not sold, you return it to me. Am I clear? Yes. Now chartered, I have sent the goods. I have sent the goods. So I will pass the entry for sales. Debtors to sales at selling price. I have passed this entry when the goods are sent only. But are the goods sold? No. With positive attitude, goods will be sold, I pass the entry. So, when the goods are actually sold, I will not pass any entry. Why? Because entry for sale is already passed. Because entry for sale is already passed. If the goods are returned, when the goods are returned, I will pass the entry sales to debtors at selling price. So I will pass the entry sales return to debtors. Pass Baba, no problem. But chartered, when the goods are sent, I have passed the entry debtors to sale. Yes. When the goods are sold, I will not pass any extra journal entry because I have already passed the entry for sale. Correct. When the goods are returned, I will pass return ka entry. But chartered, kahani mein twist. I send the goods on 1st of November. He has the time to inform me till 31st of January. Now chartered, in between comes 31st December, the year end. Now tell me chartered, year end may, no, is the period of approval over? No. Has he given me any information? No. Then what shall I assume, the goods are sold or unsold? Sir, you have to assume that the goods are unsold. Why do I have to assume that the goods are unsold? Sir, if he has not given any information, how can you assume that the goods are sold? Why? Because, sir, conservatism principle. Correct. So I have to assume on 31st of December, on year end, if it does not give me information, I will assume that the goods are unsold. So I will, but I have already passed the entry for sale. If I assume that the goods are unsold, I have to reverse the entry for sale. Yes. Second, the goods are in my godown, customers go down. Sir, customers go down. But he is the owner of the goods, I am the owner of the goods. Sir, you are the owner. If the goods are not sold, obviously you are the owner. So it should come in my closing stock or his closing stock. Sir, your closing stock. Exactly. So I have to include it in my closing stock also? Yes. So on year end, period of approval not over. Period of approval not over. And no information is received. And no information is received. Correct? Then what do? Then you pass two journal entries. One, will it be considered as sale? No. Assume that the goods are not sold. If you assume that the goods are not sold, you will reverse the entry for sales. It is sales to debtors at selling price. You had already passed the entry for sale. On the year end, when it does not give you any information, you will assume that the goods are not sold. Why you will assume that the goods are not sold? Conservatism principle. You cannot account for future income. Acha. But you had already passed the entry for sale, so you will reverse the entry for sale. The goods are in your godown, customers go down. Sir, customers go down. Customer is the owner, we are the owner. Sir, we are the owner. If we are the owner, then we should include it in our closing stock trading at cost price. Correct? Now charted. Everybody understood this much? If yes, thumbs up. If not, thumbs down. If you want repetition, then write. Understood. Now, so when the goods are sent, you pass the entry for sale. When the goods are sold, no entry because you had already passed the entry for sale. Return, pass the return entry. If year has ended, period of approval is not over and no information is received, then we assume the goods are not sold. Hence, we reverse the entry for sale and include in our closing stock. Now charted, there are two types of stock. Physical stock and book value of stock. Physical stock means stock which is there in your godown, of which you may be the owner, may not be the owner. Acha. Book value means the stock of which you are the owner, which may be there in your godown, may not be there in your godown. Am I clear? Yes. I repeat these two things. Physical stock means that stock which is there in your godown, of which you may be the owner, may not be the owner. Book value means that stock of which you are the owner. It may be there in your godown, it may not be there. I'll give you a simple example. This sale on approval, on year end, this stock is in my godown, customers go down. Sir, customers go down. So it will be in the physical stock of customer. Yes. Will it be in physical stock of us? No. Why? Because it is not there in our godown. But are we the owner? Yes. So will it come in our book value? Yes. So book value is that stock of which we are the owner. Physical value means that stock which is there in our godown. For example, charted, I have sent the goods to my agent consignee. I have sent the goods to my agent consignee. Correct? Now, Physical stock, that means in go down. Book value means we are the owner. It should be there in our go down. Ownership is not mandatory. You should be the owner. Go down is not mandatory. Hamid, this much you understood? Fataf say yes or no. Now chartered, this stock, sale on approval. I told the year end the goods are with customer, but the goods are not sold. So is customer the owner? I am the owner. Sir, we are the owner. If we are the owner, it should come in our stock. Yes. Our stock. Which stock? Books wala ya physical value? Books wala. Why? Because we are the owner. Physically it is there in my go down, customers go down. Customers go down. So this stock, I am the owner, so it will come in my book value, but it is lying in customers go down. So it will come in customers physical value. Yes or no? Which point? Now, suddenly if you tell no point number 1, now point number 1 minute there are 4 points. You have to completely clearly tell me which one. And see, suddenly I was speaking, I had to stop. Now my this point ka rhythm has broken. Now tell me which part beta. I have sent the goods to customer on 1st of November and I told him that you keep the goods for 3 months. That means till 31st of January. 1st November to 31st of January is 3 months. I told him you keep the goods for 3 months. If the goods are sold, very good. If the goods are not sold, return it to me. Fair enough? Yes. So, on 1st September, I sent the goods. When I send the goods, I pass the entry for sales. But are the goods sold? No. With positive attitude that the goods will be sold, I pass the entry for sales. Correct? Then in future, if the goods are sold, will I pass any entry? No. Why? Because I have already passed the entry for sale. But in future, if the goods are returned, I will pass the entry for returns. Now, but suppose such situation arises, I have sent him goods on 1st. I have sent him goods on 1st November and year end is 31st December. That is after 2 months. After 2 months, is there any obligation on him to reply me? No. Why? Because I have given him 3 months. Correct? So after 2 months, my is year end. He has not, so I am on year end. 3 months are not over. And he has still not told me that the goods are sold or unsold. Then what do I assume? I assume that the goods are unsold. Why? Conservatism principle. Until and unless he says, I cannot assume that the goods are sold. So I assume that the goods are unsold. But sir, you have already passed the entry for sale. Yes, I have already passed the entry for sale. But the goods are unsold. So I have to reverse the entry for sale. Correct? I reversed it. The goods are there in my go down, customers go down. So the goods are still there in customers go down. But who is the owner? We are the owner, customer is the owner. Sir, we are the owner. If we are the owner, it should come in our closing stock, customer's closing stock. Sir, it should come in our closing stock. Included in our closing stock. But physically the goods are there in customers go down. So in my book value it will come, in customers physical value it will come. Correct, Hamid? Now tell me. Now chartered. So what is physical stock? The stock which is there in my godown. What is book value? The stock which is there in. What is physical value? The stock which is there in. Physical value means stock which is there in my godown, and book value is the stock of which I am the owner. Now listen. Sale on approval. The stock is with customer, but I am the owner. So it will come in my book value, but customers physical value. Suppose I have sent the goods on to my agent. I have sent the goods to my agent. Agent has not sold the goods. So agent ka physical value में it will come because it is lying in agent ka godown. But I am the owner. So it will come in my book value. This is point number A, point number B. I have sent the goods to my agent. Agent has not sold. So goods are lying in his godown. But it is his physical value. But is he the owner? No. We are the owner. If we are the owner, it will come in our book value. Yes or no? Number 3. The goods are at branch. The goods are at branch. Correct? So branch, head office. The goods are at branch. Goods at branch. So it will come in branch ka physical value. But is branch the owner of the goods? No. Head office is the owner. If head office is the owner, it will come in head office ka book value. Correct, incorrect? Correct. Sold but not dispatched. Sold but not dispatched. Chartered sold but not dispatched. That means goods are still there in our godown. Yes. So physical value mein it is there. Book value mein it is not there. Why? Because I have sold it. Oh. 6. Received goods but bill not received. Received goods but bill not received. So physical value mein it is there, but book value mein it will not be there. 7. Bill received, goods not received. Bill received, goods not received. Book value mein it will be there, physical value mein it will not be there. So book value mein ownership is mandatory. Physical value mein by go down mein it should be there. Now I have given you 1, 2, 3, 4, 5, 6 examples. Anybody, any doubt in any examples? Fatafat tell me. Anybody, any doubt in any of the 6 examples? 4th one. That is goods sold but not dispatched. I have sold the goods but I have not dispatched. Not dispatched means not sent to customers. But the goods are still there in my godown. So it will come in my physical value, but I have sold. So am I still the owner? No. So it will not come in our book value. Now, fifth one, goods, received goods, but bill not received. We have received the goods, but invoice is not received. We have received the goods, but invoice is not received. That means physically we have received, but are we the owner? No. So physical value mein it is there, book value mein it is not there. Correct? Shall we move ahead? Bolo haan ya na? Haan. Now, so you understood the difference between physical value and book value. Now, Chartered, tell me, our objective is to find out closing stock. Closing stock should be at cost, but sales, we want to find out closing stock at cost price. Correct? We want to find out closing stock at cost price. So all the transaction in the question should be at cost price. So all the transactions in the question should be at cost price. Yes. Now, Chartered, my question is, if any transaction is at selling price, we have to convert into cost. If any transaction is at selling price, we have to convert into cost. How do we convert into cost? Selling price minus GP. Generally, sales return and sale on approval are at selling price. So from this we'll minus GP, we'll get this at cost. Am I clear? We want to find out closing stock at cost. Therefore, if any item is given at selling price, convert into cost. Number 4. Suppose there's a damaged goods or slow moving item. There's a damaged goods or slow moving item and chartered its cost is 5,000, NRV is 1,000. That means it should be valued at NRV. Yes, but it is valued at cost. So what do? So we should value at 1, but it is valued at 5. It should be valued at 1. That means in SRS subtract 4,000. In SRS subtract 4,000. Correct? I repeat, it should be valued at 1. It is valued at 5. Therefore, reduce it by 4. Correct? Number 5. Overcast it. If it is given overcast, then subtract. If it is given undercast, then add. Am I clear? SRS is stock reconciliation statement. Now, correct? Now charted one simple question. This is 31st of March. This is 4th of April. I have purchased goods here. I have purchased goods here. Correct? Now, can you tell me, if I have purchased goods here, then on 31st of March, is it there in my stock or it is not there? Answer in yes or no. I have purchased goods after 31st of March. So on 31st of March, the goods are there or not there? Yes or no, Khali? Not there. No. Not there. Not there. No. Not there. Not there. Bus. Not there. So it is over here, no. Correct? You have purchased on 4th, before 4th of April. So on 4th of April, it should be there, should not be there. On 4th of April, it should be there, should not be there. बस आदित्य मुझे यही नहीं चाहिए था. I did not want this only. You have a format in your head. That this will be add, this will be subtract. No. Less purchases between 31st March and 4th of April is a wrong assumption. It should be there. If you really want to learn Aditya, follow this method. Your method to you follow this method. Then you will compare. You will find that some transaction will not fit in your that table. No. It should be there. Now chartered. Should be there. Very good. 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 Now, if it should be there, that means you are always supposed to move towards year end. So you are moving from yes to no. It should be there. It is not there. Should be there. Sorry. So now from yes to no you are moving. What will you do? Add or less? Bolo bolo. Very good, Pramila. Onu less, correct. Damini, correct. Subu, correct. Correct. So if you are moving from yes to no, you will subtract. Now see charted. I will give you another example. 31st of March, 4th of April. Now, if you are moving from yes to no, you will subtract. If you are moving from no to yes, you will add or subtract. If you are moving from yes to no, you will subtract. If you are moving from no to yes, you will add. Correct? Correct. Now charted, goods are sold over here. You have sold the goods after 31st of March. You have sold the goods after 31st of March. So on 31st of March, the goods are there with you, not there with you. You have sold the goods after 31st of March. So on 31st of March, the goods are there with you, not there with you. There, 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 there. Very good. There, there. Correct? The goods are there. Now charted. So on 4th of April, it is there or not there? You have sold the goods. On 4th of April, it is not there. If you are moving from year to year, you will do add. If you are moving from yes to no, you will do less. But कहानी में twist करता है. Aditya, tell me what you would have told me. You would have told me less sales between 31st of March and 4th of April. Yes or no? What you would have told me? What you would have told me then? 31st of March and 4th of April के बीच का सेल होगा तो what will you do? Sir, add sales between, add करेगा. Now listen. Suppose if I would have told you sold goods but not dispatched, then what will you do? Sold goods but not dispatched. Now I'll tell you. Sold goods but not dispatched. That means in physical value, it is yes. In book value, it is no. So if you are finding the physical stock, then yes, yes, ignore. But if you are finding the book value, then yes, no. Sorry, no to yes, add. Correct? Everybody understood? Now let's do few questions. A trader's accounting year ends on 31st of March 2019. But the actual stock taken on 23rd December 2019, it is valued at 27,000. Now charted one very important line. Stock given. Stock given can be physical stock, can be book value. But question remaining silent. It is always physical value. stock to be calculated. You may be asked to calculate book value also, you may be asked to calculate physical value also. But if nothing is given, you'll always calculate book value. I repeat, stock given, nothing is, question remaining silent, then it is physical value. Stock to be calculated, question remaining silent, book value. Am I clear? The stock which is given in the question, they have not told whether it is book value or physical value. The stock which is given in the question, they have not told whether it is book value or physical value. Then it is always physical value. Stock on 31st of March, nothing is given. Stock on 31st of March, nothing is given. Then you are always supposed to calculate book value. Am I clear? Stock which is given in the question, nothing is mentioned. Assume physical value. Stock which you are supposed to calculate in the question, nothing is given. Calculate book value. Am I clear? Thumbs up, thumbs down, or ask the question. Hello. Now, over here it is 23rd. December, 31st December, 23rd December, 31st December. Tell me, chatted, 23rd December ka stock is how much? Physical value 20,000. Calculate physical stock on 31st December. Calculate physical value on 31st of December. So we'll always move towards year end. We'll always move towards year end. What is the GP? GP is given in the question as 25% on cost. That is 25 by 125. Correct? Yes. Sales between 23rd December and 31st December is 1,500. Sales is 1,500. GP 25 by 125. 300. So you got cost 1,200. Now if you have sold after 23rd, if you have sold after 23rd, on 23rd it was there with you. If you have sold after 23rd, on 23rd it was there with you, then you have sold it. On 31st December it is not there. You have sold after 23rd, so on 23rd it is there with you. Then you have sold it, so on 31st December it is not there with you. Yes or no? You will move from yes to no, no to yes. Yes to no. Why? Because you will always move towards year end. What will you do? Bola bola, yes to no mein. We will subtract. Then purchases during the same period. Now, generally people say if sales is less, purchase is add. Again, I beg of you, don't do it that way. Purchase is how much? 700. You have purchased after 23rd December. You have purchased after 23rd December. So on 23rd December, it was there with you, not there with you. You have purchased after 23rd December. So on 23rd December, was it there with you, not there with you? No, not there. Then you purchased it. So on 31st December, it is there or not there? It is there. You are moving from no to yes. Add. Correct? sales return and purchase return during the above period amounted to rupees 200. Sales return is how much? 200. GP 25 by 125. 25 by 125 is 150. What you are saying not counted, that's what I am saying. No, not is it there or not there? Same thing, no? 25 by 125 is 1/5. 1/5 of 200 is 40. Sales return का मतलब we have received goods. Sales return मतलब received goods. Now chartered, if I tell you, you received goods after 23rd, you received goods after 23rd, so on 23rd, was it there with you, not there with you? You received the goods after 23rd, so on 23rd it was there with you, not there? No. Then you received it. Is it there? Yes. Now, so you are moving from no to yes. Add. Again, I'll tell you. If sales is less, purchase is add. If sales is less, then sales return add. This I can also do. It works in 99.99 situations. Believe me. If sales is less, purchase is add. If sales is less, sales return will be add. It will work in 99.99% situation. I can show you 5 sums, it will not work. It's a request. Rest it's your choice. Take 30 seconds extra. Accuracy is more important than speed. If I finish the paper, but my 40 marks is incorrect, beta, how will it help me? Speed is definitely important, but the first priority is accuracy. I don't mind spending extra 10 minutes in the question if my entire question ka solution is correct. Now, purchase return. Obviously, I can say purchase return is how much? 80. If sales return is add, purchase return less. Simple. But purchase return matlab goods given. If you have given the goods after 23rd, so on 23rd it was there with you. If you have given the goods after 23rd, on 23rd it was there with you. And now you have given, now it is not there. You are moving towards the year end. Yes to no, less. Correct. Stock sheet is overcast, again less. So what will be your SRS? 27,000 less 1,200, add 700, add 160, less 80, less 1,000. Whatever you get. Correct? Sir, is this mandatory in the examination? No. This is not mandatory. Like as a student, what I would have done. The question, jiska answer, if I would have got it mentally, I would have done it mentally. The answers which I would not have got it mentally, uska working note I would have done. I would have done working note for few. I would not have done working note number 25080. Ready? Yes. Yes. See this question. Mr. Bimal prepares. They'll send this. Notes will come. Mr. Bimal prepares accounts annually on 31st of December, but the stock taking takes place on 6th of January. ठीक है? Now, But the stock taking place is on 6th of January, and 6th of January it amounts to 31st of December, 6th of January. Next year, 6th of January it is. Physical value 36,000 and asset in the physical value on 31st of December. They are supposed to find out physical value. Now chartered, you will always move towards year end. GP is 30%. GP is equal to 30 by 100. Correct? Now, sales is how much? 4,000. GP 30 by 100. So 1,200. My cost is how much? 2,800 charted. Correct, incorrect? Correct. You have sold the goods. That means you have given the goods after 31st. Yes. So on 31st, it was there with you. Yes. Then you gave it away. Yes. On 6th of January, it is not there. You are moving from no to yes. You are moving from no to yes. What will you do? Add. Now, goods sent on approval after 31st of December. So sale on approval after 31st December 3,000. GP 30 by 100. 900. So 2,100. Again, this is goods given. This is goods given. If you have given the goods after 31st, so on 31st it was there. Then you have given. Over here it is not there. Correct? No. They are moving from no to yes. What will you do? You are moving from no to yes. What will you do? Add. Now, anybody, any doubt in 1 and 2? Because I want to talk a little more than this in this situation. If everybody's understood, do thumbs up, then I move ahead. What a fart. Now chartered, suppose instead of physical value over here, if they had given book value. Instead of physical value, they had given book value. Then sale on approval also, it is with customer. Is customer the owner? No, we are still the owner. If this was book value, no, then this would have been yes. And if this would have been yes, 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 no add, no subtract. Did you understood this? If instead of physical value, if they had given book value, instead of physical value, they had given book value, then although sale on approval the goods are with customer, but customer is not the owner. Do I have the goods physically? No. But am I the owner? Yes. Will it come in my physical value? No. Will it come in my book value? Yes. Correct? Understood? So if it is yes, yes, no add, no subtract. Chalo. Now chartered. Purchases made during the period as per purchase book amounted to 7,000. The above purchases include goods worth rupees 1,500 which are not delivered but the invoice was received. So out of 7,000, 1,500 ka delivery is not received. That means how much ka delivery is received? 5,500. So purchase and not received 1,500 Purchased and received. Purchased and received. You have purchased after 31st. On 31st, it's not there. It is not received, so physical value में still not there. It is received, so physical value में there. Correct? Not received मतलब physical value में not there. Received मतलब physical value में there. Correct? But now chartered, again I am telling you, if this was book value instead of physical value, then here also you would have written yes only. If instead of book value, if this was instead of physical value, if this was book value, here also you would have written yes. Correct or incorrect? Tell me. No. Anybody, any doubt? How's life going till now? ठीक है आदित्य, it is okay. That's what I am saying. Ultimately, you ask questions and find out the answer na, instead of following a format. That's what I am doing. Correct? No? Am I wrong? So you are asking whether I am the owner or not. If I am the owner, it will come in my book value. I am not the owner, and it is there in my goods, then it will come. Ultimately, say you are saying it should come, it should not come. If it should come, then add. If it should not come, subtract. Hey Aditya, समझा? Now, chalo. The above purchases ratio khatam. Sum is over. Now chartered. The financial year of a concern. The financial year of a concern ends on 31st of March 19. ठीक है. The financial year of a concern ends on 31st March 19, but the stock in hand was verified on 7th April. Oh my God. Now chartered. Says 31st of March, 7th of April. 7th of April को physical value is, you are supposed to calculate book value on 31st of March. You'll always move towards 31st of March. GP is equal to 20 by 100. Purchase as per purchase day book amounted to 2500. ठीक है. So purchase is 2500. So you have received the goods after 31st. Purchase after 31st means 31st में no. 7 में yes. From yes to no. Yes. Correct? Book value में you have purchased after 31st of March. So on 31st of March, should it be there? No. You have received the goods after 31st of March. On 7th of April, physical value में should it be there? Yes, you have purchased before 7th of April, so it will be there. Now, in respect of goods costing rupees 5,000, received. Invoices were not received. Bill not received. My question is, on 31st of March, it should be there, it should not be there. On 31st of March, it should be there, should not be there. Yes or no? What shall I write on 31st of March? 31st of March, what shall I write? Yes or no? You have In respect of goods costing rupees 5,000 received before 31st of March, invoices not received up to the date of verification. Why? No. Very good. Why no? No. Why? Because we have physically received the goods. We have not received the bill. And we are supposed to find out the book value. Book value, may it will come, it will not come. It will not come. Correct. Wonderful. No invoice. Correct, Sumul. But you have received the goods. So on physical value? Yes. आजा प्यारे डांस हमारे काहे घबरा काहे घबरा सुन सुन सुन. Correct. Now, yes to no, whatever. Goods costing rupees 3,000 lying at branch were not considered in stock taking. So, branch at 3,000. Tell me, on 31st of March, what will I write? Yes or no? Give me the reason also. On 31st of March, branch mein there is a stock. On what will I write? Yes or no? Yes. It is in my branch, JKSC 221142. It is there in my branch. Stock costing rupees 3,000 lying at branch. So who is the owner? Branch is the owner or you are the owner? Genius, Samiksha. Samiksha, you have studied here only. JKSC. Wonderful, Sumukh. Wonderful, Aditya. No, sir. It is branch, not head department. We are head office. The stock is at branch. Hamid. Which branch? Now, the stock at branch. Yes. Why it should be yes? The stock is at branch. I am the owner. Branch is the owner. We are the owner. So it will come in our book value. It will not come in our physical value. No to yes. Add. We are the owner. Correct. Now chartered. I will send this. इसका photo ले लो आप. This solution ka photo you take, because the sheet which I will send will not have this question. I will send you the original sheet where all the answers will be. Correct. I will send you a sheet where all the answers will be there except this answer. This answer ka photograph you should take September 25 ka. Yes. Bye bye. Nahi. We'll start with next chapter. Next chapter should be what? Next chapter should be what? Bills, ERS, inventory, depreciation. Last question answer. Now so difficult. Final accounts. Yes. Answer, yeah, whatever. Mhm. Now, my wonderful chartered accountants. Final accounts. Now, chartered, listen. Shall we start? Yes. Final accounts. Now, chartered, there are two types of organization. One is manufacturing and one is trading organization. What is final accounts? During the entire year, we go on passing journal, ledger, journal, ledger, journal, ledger. Entire year we go on doing. At the end of the year, we close the ledger accounts and prepare trial balance to check the arithmetical accuracy of trial ledger accounts. Am I clear? To check the arithmetical accuracy of ledger accounts, we prepare a trial balance. After trial balance, we go through the accounts once more, and whatever transactions which we feel we have done wrong or we have not done, those transactions we write it as adjustments. So adjustments basically mean those transactions which are yet to be accounted. Corrected? Yet to be accounted. So journal ledger we go on doing throughout the year. At the end of the year, with this ledger balances, we prepare trial balance. Why do we prepare trial balance? To check the arithmetical accuracy of ledger accounts. After we prepare the trial balance, we go through the accounts once again. And if you have made any mistake, we write down the mistakes. Or if you have missed out certain entries, we write down those. So adjustments are those items which are yet to be accounted. Accounting is to be done. And trial balance consists of those items whose accounting is done. Am I clear? So if trial balance ka accounting is done, chartered, accounting is done, that means that item will be posted once only. And if accounting is yet to be done, that means debit, credit, both postings should be done. Am I clear? Yes. Now, so with this trial balance and adjustments, you are supposed to prepare final accounts to find out two things. One is profit and one is financial position. So with this trial balance and adjustment, that means items yet to be accounted, you are supposed to prepare final account. Final accounts can be of two types. One is manufacturing, one is trade. Correct? Manufacturing account will first, manufacturers will first prepare manufacturing account, then trading account, then PL account, and then balance sheet. Traders will prepare trading account, PL account, and balance sheet. Correct? So trading PL and balance sheet is same. Only manufacturing account, manufacturers prepare one extra account which is known as manufacturing. Now, why do we prepare trading account? To find out gross profit, that is profit on sales. Why do we prepare PL account? We prepare PL account to find out net profit of the organization. Why do we prepare balance sheet? To find out financial position of balance organization. Am I clear? Why do we prepare trading account? We prepare trading account to find out gross profit on sales. Why do we prepare PL account? We prepare PL account to find out net profit of organization. Why do we prepare balance sheet? We prepare balance sheet to find out financial position of the organization. Am I clear? Yes. Now, chartered, If I tell you trading account, what do you write in trading account? Correct. What do you write in trading account? So you will say to opening stock, to purchases less returns, that is net purchases, to direct expense, by sales, net sales, by closing stock, to gross profit. Correct. Now I have got a very simple question. Question number 1. Stock in trading account represents which stock? Stock in trading account represents which stock? Raw material, work in progress, finished goods. Correct. Raw material or work in progress or finished goods or all three or some two, what? Which stock it represents? This is my first question. What chartered, will you answer this? If you prepare a trading account, there is a stock. That stock represents which stock? Raw material, work in progress, finished goods, or all three? Okay. Diksha, okay. Hamid, okay. Rest, I've got 3-4 people ka answer only. What do you call this stock? Na, 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 na. Now chartered, this stock is only finished goods. It is only finished goods. Whether we are manufacturer or we are trader, in trading account we always write stock of finished goods only. Whether we are trader or manufacturer, trading account will always write opening and closing stock of finished goods only. Am I correct? Yes sir, no sir. My second question. Question number 2. Ask Aditya. Ask a doubt. Relax. मतलब this first question में the format का बात नहीं कर रहा है. Question number 2. When I say direct expenses, I did not say this trading account is of a trader. Do traders have direct expenses? Yes. My question is, in this trading account, this trading account can be of manufacturer, can be of trader, both. Then what does purchases mean? In case of manufacturer, in case of trader. This trading account, I have not told that it is of manufacturer, I have not told it is of a trader. If I ask you what will come in trading account, this is what you say. First of all, tell me yes or no. Then only I can move ahead. Suppose I don't ask you this question. I ask you, this is trading account, correct, incorrect? What will you say? This is trading account. What will you say? Correct or incorrect? This is the format of trading account. What will you say? It is correct or incorrect? Can be manufacturer, it can be trader, I don't know. बोलो बोलो. It is trading account, that I know. But it is of the format is correct? Yes or no? For both trader and manufacturer? Correct. Yes, sir. Now, then purchases means what? Purchases, for first thing you got it clear, trading account will always have finished goods ka stock. Trading account will always have finished goods ka stock. So trading account represents basically finished goods account. Acha, yes. Now tell me, purchases of what? Sir, purchases of what? No, 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 no. No, 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 no. Purchases means what? Now chartered, if it is manufacturer, then purchases will not come. Then cost of production will come. If this trading account is of trader, then you will write purchases of finished goods. But if this trading account is of manufacturer, then you will write to cost of production of goods manufactured. Am I clear? Yes. Direct expenses I will discuss little later. Sales of finished goods only. So now if I simplify the format, it will become like this. There is a trading account for trader. There is a trading account for manufacturer. Trading account of trader is opening stock, purchase, sales, closing stock. But trading account of manufacturer is opening stock, cost of production, sales, closing stock. Both, all items are of finished goods. Opening stock, finished goods, purchase, opening stock, finished goods, purchase, finished goods, sales, finished goods, closing stock, finished goods. Over here, opening stock, finished goods, cost of production of finished goods. Why? Because manufacturer chartered does not purchase finished goods. It produces finished goods. This is trader. He purchases finished goods. Am I clear? So since manufacturer manufactures finished goods, this cost of production of finished goods, sales of finished goods, closing stock of finished goods. Now chartered, I am concentrating on manufacturer. Am I clear? Now chartered, from where do you get? So trader ke liye this is okay. For manufacturer, purchase goods, it's already given, you directly posted it. But cost of manufacture, so you need to calculate. Calculate cost of manufacturing. To calculate cost of manufacturing, we prepare manufacturing account. Oh. So manufacturer first will prepare manufacturing account. From there it will get cost of production. That cost of production it will transfer to trading account. And trading accounts it will get gross profit. That gross profit will go to PL account. PL account will give net profit. Net profit will be added to capital. And then balance sheet will tally. Dhum ta na 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 na. Ye samjha ke nahi? Yes or no? Correct. Now chartered. So first we learn manufacturing account. Now to manufacture chartered, we require three things: material, labor, overhead. Material, labor, overhead. Correct. The manufacturing account में the first thing we write is to opening WIP by closing WIP. Opening WIP means those goods which were incomplete last year but will get completed in the current year, and I remove closing WIP because they are incomplete in the current year. manufacturing account gives us cost of production of finished goods or unfinished goods. Sir, manufacturing account will give us cost of production of finished goods, and that cost of production of finished goods will go to trading account. Very good. That means manufacturing account may I have written opening WIP because that is incomplete goods will get completed in the current year. Yes. And I am removing closing WIP because they are incomplete goods of current year. I am interested only in the complete goods. So I am including incomplete goods of last year which will get completed in the current year, and I am removing incomplete goods of current year which will get completed in the next year. Yes sir, no sir, yes sir. Then we write to raw material consumed, to raw material consumed, to other manufacturing, productive and factory expense. To other manufacturing, productive and factory expenses. Correct? By sale of scrap. By sale of scrap, I have produced thousands of units, but some units were defective, so I sold it at a cheaper price and got money. That I will not treat it as sales, I will treat it as reduction in my cost. For example, I produced 10 shirts, each shirt got 10 shirts for 10,000 rupees. One shirt got damaged. That damaged shirt, I sold it for 500 rupees. So what will I say? My cost is 10,000 and 500 is my revenue. No, I will say I have 9 shirts and 9 shirts ka cost is 9,500. So sale of scrap is not treated as income but reduction in cost. Manufacturing account helps me to calculate cost of production. So income does not come in manufacturing account. Whatever you see on the credit side of manufacturing account, that is nothing but reduction in cost. It is not income charted because manufacturing account helps us to calculate what? Cost of production. If this account helps us to calculate cost of production, will income come here? No. Income will come in trading account or P&L account. Income will not come in manufacturing account. Whatever you think is an income in manufacturing account chartered, that is not income. That is reduction in cost. Understood? Yes or no? So sale of scrap. What? Now, sale of scrap you understood. Now chartered. Similarly, by byproduct. By byproduct. What is byproduct? From milk, when I am producing butter, I get a buttermilk as byproduct, which I sell it. From crude oil, when I want to make petrol, I get kerosene as a byproduct, which I sell it. When from a piece of shirt length, when a shirt length say I produce, chartered, 1 minute. When a shirt length say I produce shirt, I get small pieces as rumal, handkerchief. That handkerchief is a byproduct. So all that byproduct will be sold and that would give me money. That money ko will I consider as income or reduction in cost? Reduction in cost. Acha. So on debit side, what I have written? Expenses. To manufacture anything, how many types of expenses you require? 2. One is material. Without paper, can you manufacture this? What is raw material? Raw material is nothing but material using which you will prepare goods. So for preparing goods, paper is a raw material. For manufacturing shirts, cloth is a raw material. For manufacturing mic, plastic is a raw material. For manufacturing shoes, leather is a raw material. So on that, you will incur expenses to convert that into goods. So there are 2 main expenses for manufacturer. One is raw material and one is cost of conversion. One is raw material, another is cost of conversion. All the other cost of conversion are known as what? Manufacturing, production, factory expenses. So all these are my expenses. So all these are my expenses and all these are my reduction in expense. So suppose I have spent 500 rupees on raw material and manufacturing expenses. 50 rupees I have earned from sale of scrap and production. Then I will say my cost of production is 450. Is this clear? So debit side may expenses, credit side may reduction of expenses. Balancing figure is actual cost of production. Yes sir, no sir. Yes sir. So doubt. Sir, please explain why raw material consumed is included and debited in manufacturing account. Just now I explained to you. Now, correct? Now charted. So you understood how to prepare manufacturing account? Yes. Opening WIP, raw material consumed, other manufacturing expenses, sale of scrap, production, closing WIP, balancing figure is cost of production. This cost of production will go where? That cost of production, this cost of production chartered will come out from here and go over here trading account. Dio Rama, they understood? Yes or no? Yes. Now chartered. But how to find out raw material consumed? To find out raw material consumed, we will prepare raw material account. Sir, oh sir, we have studied add less of raw material. Prepare raw material consumed account because there is one question in exam where they had prepared raw material consumed. So, raw material account. To opening balance of raw material, to purchase of raw material, by closing balance of raw material, by raw material consumed, balancing figure. This raw material consumed will come here. So to find out raw material consumed, you have to first prepare what? Raw material account. So from raw material account, this is opening balance of raw material, opening stock of raw material. So opening stock of raw material will come in raw material account. Opening stock of WIP will come in manufacturing account. And opening stock of finished goods will come in trading account. Yes or no? Yes sir, no sir. Opening stock of raw material in raw material account. Opening stock of WIP in manufacturing account. Opening stock of finished goods in trading account. Raw material ka stock in raw material account. WIP ka stock in manufacturing account. Finished goods ka stock in trading account. Yes or no? Yes. But chartered to if we do credit purchases. So for credit purchase, we need to prepare suppliers account or creditors account. Yes, sir. No, sir. The suppliers mail, right? By balance brought down. To balance carried down. By purchases. When you purchase goods, the journal entry is purchases to suppliers. The suppliers may buy purchase. When you purchase goods, the journal entry is purchase to suppliers. Suppliers may buy purchase. And when you make payment to suppliers, suppliers to cashback. Suppliers to cashback. This purchases say you will take it from here, post it here. So now tell me chartered first which account you should prepare. Tell no, please don't do like this. First which account you should prepare. Tell me, na 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 na. First you should prepare suppliers account, then you should prepare raw material account, and then you should prepare manufacturing account. Yes, no, yes sir. Now listen. Final accounts. This is a manufacturing account. Manufacturing account is prepared by all manufacturing organization. It is prepared with all the cost which is incurred to manufacture or produce goods. Direct cost or direct expenses. Manufacturing account is prepared to calculate cost of production. Steps to prepare manufacturing account. Step 1, suppliers account. If suppliers account. Step 2, raw material account. Step 3, manufacturing account. Opening WIP, raw material, all direct. This capsule 1 is there from institute material I have been doing from ages. This time it came in the exam also. So we'll do some good question. This question is also ये question करें. This question had come, this and this is yeah, similar. This had come in the opening WIP 10,000 units, 16,000. So opening WIP will come in manufacturing. Closing WIP. Correct. Opening raw material, that will come in raw material account. How much? Closing stock of raw materials 190. Then purchases 190. Purchase, this is purchase of raw material. Higher charges of machines 60 paisa per unit manufactured. How many units you manufactured? 5 lakhs. So 5 lakhs into 60 paisa is manufacturing expense. 5 lakhs into 60 paisa. 3 lakhs. Then higher charges of factory, that is higher charges of factory 2,20,000. Direct wages contracted at 80 paisa per unit manufactured and 40 paisa per unit of closing stock. So 80 paisa per unit manufactured. So 5 lakhs into 80 paisa per unit manufactured plus 40 paisa of closing WIP. Closing WIP is how many units? 12,000. So 12,000 into 40 paisa. So units which are complete manufactured on that 80 paisa and WIP per 40 paisa. So that is direct wages. How much? 5 lakh 4,800. Purchase is 8 lakh 20. Sorry. Now, direct wages I have done, then repairs and maintenance. How much? 1,80,000. Please tell me what is raw material consumed ka balance? 990 minus 190. Tell me raw material consumed ka balance. $8 lakhs. Now, Sridhar Vembu, you know him, Sridhar. This 8 lakhs will come in raw material consumed working. Correct? Direct wages. Direct wages, they have told completed units, that is 5 lakhs, and closing WIP, that is 12 lakhs, 12,000. Units manufactured, that is 5 lakhs, and 40 paisa per unit of closing WIP. Closing WIP is 12,000. So complete units per they have incurred 80 paisa, and incomplete units per they have incurred 40 paisa. So 5 lakh, sorry, calculation mistake, 4 lakh 4,800. Now, so 5 lakh into 80 paisa is 4 lakh. 12,000 into 40 paisa is 4,800. 4 lakh 4,800. Understood. On 5 lakh units, 80 paisa you have spent. On 12,000 closing WIP you have spent 40 paisa. On complete units manufactured, that is 5 lakh, 80 paisa you have spent. On incomplete units, 12,000 units you have spent 40 paisa. 4 lakh 4,800. Bola bola. Understood. Now you will get cost of production over here, balancing figure. Tell me how much it is. Cost of production 19 lakh 800. Check everybody. Correct. Understood? Yes or no? This manufacturing account customer I was telling, see it is given raw material account, creditors account, manufacturing account. This sum we'll do it tomorrow, and then we'll do full-fledged final accounts. Am I clear? Yes? No? That's all for the day. Bye-bye. Understood?